the US passed something called the Genius Act. This is one of the first major legislative steps towards regulating and legitimizing the stablecoin industry. It sets clear rules for how US dollar-backed stablecoins like USDC can operate, opening the door for more regulated institutional usage and likely accelerating stablecoin adoption. One of the biggest beneficiaries of this development has been Circle, the issuer of USDC, whose stock has rallied over 200% since going public in early June. And while that rally reflects growing investor confidence in stablecoins, there is a big fundamental impact that the Genius Act could have on Ethereum. This chart shows us the total stablecoin supply for different blockchains. This, right here, is Ethereum's share, making up nearly 50% of all stablecoin supply. That makes Ethereum the largest primary infrastructure layer for the stablecoin economy. As stablecoins continue to expand, the networks that power them stand to benefit significantly. This chart shows the share of stablecoin transactions seen on different crypto networks. Today, Ethereum makes up about 60%. So, more than half of all stablecoin transactions are now happening on the Ethereum network. For comparison, the second highest blockchain is the Tron network that currently has a share of about 15%, so 4 times less than that of Ethereum. As the stablecoin market size grows due to increased adoption, it would likely translate into more Ethereum usage and fees generated for the network. That's because it takes the Ethereum coin to pay gas fees for moving Ethereum-based stablecoins. As fees rise, Ethereum's supply mechanically shrinks, since a portion of the fees is permanently burned. That makes rising usage not just profitable for the network, but also bullish for Ethereum's price over time. And signs of growing Ethereum activity are already beginning to show up on-chain. In just the past few weeks, there's been a noticeable spike in the number of Ethereum transactions. This is one of the clearest signs that usage is picking up, which is fundamentally important for any asset to grow. This surge began last month, right around the same time the Genius Act was passed, suggesting that regulatory clarity could already be unlocking new demand. Now, to be clear, transaction levels are still below the highs we saw back in 2021, but the overall trend has been gradually rising, and that momentum seems to be accelerating now. The last 2 times we saw a sustained rise in Ethereum transactions were from 2016 to 2017, and again from 2020 to 2021 cycle. If we look at what Ethereum did, both times it saw strong rallies during this period, and went on to hit new all-time highs. That historical pattern, of course, doesn't guarantee a repeat, but it does show how rising on-chain activity has often been the foundation for major Ethereum bull runs. And if usage continues to grow quickly, then we think that new all-time highs for Ethereum is a real possibility.